We're live. Happy Monday. I mean Tuesday. The market is picking up steam, team. I'm telling you right now. Been busy today. Continually getting busier and busier. People just can't sit on their hands forever when it comes to real estate. Everybody wants to own it. Everybody should. It makes so much sense to do it. And we are seeing buyers come out of the woodwork. Still more of a buyer's market, though. You know, the reality is right now that sellers have screwed a lot of things up for themselves. Unfortunately, what are you going to do? What are you going to do about that? All right, we got a few things to talk about today. I got to make it somewhat fast. I still got calls to make. I'm telling you right now, offers are flying, rates are climbing, but buyers just can't stay away. They want in. They want in. And they are coming back to the table hardcore right now. Buyers are coming back hardcore. I'm going to try to illustrate something for you today. I'm going to try to illustrate for you just an understanding of how interest rates do affect home values, but there is not a direct correlation. And I know that's easy to say, but I'm going to try to visualize that for you today. Okay. Dow closes more than 100 points lower in post-Labor Day session as interest rates pop. Important note here, as interest rates pop. What's going on? What is going on? We are live on all kinds of platforms up in here. If anyone's watching this on LinkedIn, please shoot us a comment so we can see if that even works. We're on LinkedIn Live. We're on YouTube. We're on Twitter. We're on multiple Facebook pages. Say what's up. Just like my boy Brandon Mushin. B Mush in the house. What is going on? They should be buying right now. Can always refi, but maybe never get a lower purchase price. Good point. Yeah, you can always refi when rates drop, but when are you going to get to rule the roost as a buyer? You got to look for those opportunities. We are in the opportunity zone right now. Right now. Now, that does not mean that we are necessarily at the bottom. What's up, NJ? That's a YouTube comment. See, you can see that. What's up, Camille, my good friend? I will talk about this. Rates today, FHA, VA, low to mid fives, okay? Conventional now, pretty strong in the sixes. You can get lower rates on conventional if you're putting big down payments and stuff. I always kind of quote the minimum down payments that most people are. But I'm going to show you interest rates today. In fact, Camille, this is for you right here. This is a link that's going to be on this today. A lot of people ask me, like, what are mortgage rates today? How do I find out what these things are? Mortgage News Daily is a great place for that. You go on here and you can see, and it gives you the 52-week range. You can see if we're close to the high end of the range for the last year, the low end of the range. Gives you multiple different ones. FHA and VA are both on here represented. You can also do different calculators on here and stuff. They show you charts of the interest rates. It's pretty cool. And that's the free version. You don't have to sign up for anything. So Mortgage News Daily, boom, there you go. There's rates. And you can see now my rates are actually going to be lower than what you see on this page, but it'll at least give you something to go by, right? It gives you something to work with. So know that my rates are better than this. Maybe not by a lot, but they're better than this. And if you're getting a quote on a rate that's like way above this, or significantly higher than this, and you don't have some sort of credit challenge or someone's charging you fees or something like that, just know that's a good sign you need to get a second opinion, which is something I'm happy to do for you. Make sure you're getting a good deal. So that link is going to be in the description. Bookmark that one. You want to check out mortgage rates? This is a great place to do it. Non-biased. You see, there's not tons of ads all over the place for like mortgage companies and stuff here. They're not a lead capture site. They're trying to pump their own thing. They want essentially mortgage pros to use this and sign up for this thing over here. So it's a good site to go to. It's a safe place to go to get interest rate information. Quick update on the Dow Jones. Then we're going to look at this terribly ugly. Oh gosh, it's so bad. Interest rates are going to get worse. Remember I told you this last week. Interest rates are going to get worse. And there's a chance we could lose like 150 basis points like that. Well, we lost 78 basis points today. So we're going to talk about this as well. I do want to show you, but just going off of the first article here, Dow closes more than 100 points lower as interest rates pop. Well, what happened? Well, I should have sized this better before we got on here. This is the chart I've been showing you for a while. This is the daily on the Dow Jones. Remember the golden pocket here. We were expecting, if we could get a bounce off of this, and on Friday we closed inside the golden pocket. Today we got outside of it, we closed below it. This is definitely a bad sign for stocks. You can almost guarantee now that we will see 30,200, which is about 1,000 points lower than we are right now. You can almost mark, the chart right here. Just expect that we're going to be touching this area. That's where we're headed next. I highly doubt we're going to get a 786 reversal on something like this. This is going to be a full retrace down to the lows. That's what it looks like. So another 1,000 points of the Dow. So brace yourselves there. Just brace yourself, prepare yourself for that. Maybe it won't happen. Maybe it'll turn around tomorrow. You never know. Anything could happen. But looks bad. Looks bad. That is a bad look. And we are not getting bounce off critical support. So no bueno. Similarly, by the way, we're also going to talk about this Bank of America program everybody's been sending to me. We're going to look at this incredible report from Redfin. All these links will be in the description, which shows just an amazing amount of data regarding what's going on in the housing market. It's comedic to me that there are people who are still talking about a real estate crash. Seriously, people are still doing this. No joke. Market's picking up. They see things like this. Oh, the average sale to list ratio fell below 100%. The average lister, okay. Sale to list price ratio under 100%. First of all, listing prices are arbitrary, right? There's no formula for this. People just pick that. They throw numbers at the wall. Who knows what they are? So I don't usually like to get data like that, but I just thought this was funny because like, oh, it's below 100%. Oh, you mean so finally the average home is selling below the list price? And that means we're crashing? Guys. Okay. I'll get back to that. Mortgage bonds still in this ugly downward channel here, but feels like we're nearing the bottom of it. Like an important moment here is going to be like, okay, so we probably bounce up a little bit tomorrow, right? Maybe check this resistance again, then we go down. The important moment is going to be when we get down to this level here, the old support. Can that hold? Because when bond prices are going down like this, that means rates are going up. We want to see bond prices go back up like that. And that would mean interest rates are going down. So we want to get a pop out of here. And we need this trend line, okay, the bottom end of the downward trend line. And we also need, this support down here to hold. So those are two things that we're looking at here to hopefully stay on entry. Now, that said, we could see in the next couple of days, rates might get a lot worse. Okay. I'm just bracing you for this. In the next 2-3 days, it's possible interest rates to get about 0.5% worse than they are right now, which sounds awful. But look, buyers are coming out of the woodwork. They're coming from every direction. People are getting pre-approved like crazy. There's all kinds of buyer activity that's going on. Now, that doesn't necessarily mean that prices are going up anytime soon or anything like that. Prices can still come down. Buyers are taking their time. They're negotiating hardcore. They're going back and looking at properties multiple times before they write offers. They're doing a lot of things that are very, very good to see buyers doing if you don't want a real estate crash. Now, I'll be honest with you. I really had this come to Jesus moment with myself. Like, I actually hope the market crashes. Terrible to say it out loud. I really do, though. There's so much opportunity when that happens. That's not going to happen, though. And I'm not going to sit here and get my hopes up and lie to myself about it. I'm just going to continue to look at the reality of the situation. And even though rates are up in here, and I'm going to say maybe another 0.5% is our worst case scenario. Okay. So I just want to throw that out there. That's our worst case scenario. Lock your rates. Okay. This is not a great chart formation in the short term. Next 2-3 candles here aren't going to be pretty, most likely. So pray for us in the mortgage world. Oh, nice. Watch from Cabo. Love that. All right. We're doing comments. We're doing questions all the time on here. If you want to comment, say what's up. Rent is 100% interest. You're right, my man, B-Mush. Here's one from YouTube. What's up, David? The Fed's balance sheet have any effect on real estate? It can. When the Feds are either selling or buying mortgage bonds, that definitely impacts interest rates, and that can definitely impact real estate prices. So it definitely can, but it's not something that, anything other than that is really going to have an impact, because the Fed is sort of really like the banker in Monopoly, and they can have as much money or pay as much money or spend as much money as they want without much consequence. Great question, though. I love that. Keep the questions coming. Whatever. That's what the comment section's there for. Okay. So lost 78 basis points today, guys. Not good. Interest rates, not good at all. We are, let's pull, look, this is kind of the reality where we are. Low sixes for 30-year fixed, assuming like a minimum down payment. That sounds about right. Low to mid fives for FHA and VA. Sounds about right. Jumbo also right there. The thing is, the 7-year ARM on the jumbo side is still sub 4%, sub 5%. Actually, no, yeah, sub 5%. So that's something that you can look at from 30-year jumbo standpoint. You can get fixed rates as well, about 0.3% higher than that. But for most people, I'm just saying, go with the ARM. You've got plenty of time to refi. Let's see. I'm not looking at myself at all here, so hopefully I'm framed. back in my home studio here. Finally, spent a month away, looking at real estate, doing many things, pulling triggers. I don't usually share that stuff. I probably still won't, but triggers are being pulled. This Bank of America new home loan program that everyone's been sending me is sort of bizarre to me. I don't know really how it meets like fair lending guidelines, because you're not supposed to like offer loans to just certain geographic areas or zip codes. Typically that's considered to be redlining, and it's highly illegal for fair lending practices. So I don't know if they're getting away with this because the altruistic sort of objective behind it. I really don't know. But basically, the Bank of America is saying, hey, we have a home loan program that's 0% down and no closing costs or no lender fees. They can't control closing costs, guys. But this is an advertorial, and you're going to see ads for other banks in this too. But I'm going to include the link because I do think some people will be interested in this. And reality is this. There really does need to be a program like this. There really does need to be like a low income, zero down kind of program. We have CalHFA here in California where you can get that. So like we can help people buy homes with zero down all the time through CalHFA. It's an FHA loan with a second that's silent and forgivable. So you can get a 100% loan to buy a home with FHA through CalHFA. And we help people do that all the time. So I do think there needs to be more programs like that. It's just tough to make a pencil. I highly doubt this works out for Bank of America. And my guess is that it won't last very long, but it's something that I want people to be aware of. Like there are opportunities like that, whether it's Bank of America, whether you go through me, through CalHFA or whatever. If down payment is your problem for buying a house, you make money, let's say, but you just can't save up enough for down payment, but you want to own a home, you don't want to keep paying rent, you know it's going up every year, then look into a program like this. Look into a CalHFA program with me. Look into something. Let's see if we can figure it out. You'd be surprised. I've got a lot of experience. I've got a lot of brain power on this. And I figure out a lot of stuff every day for all kinds of people. So put me to work. This is probably the most time I've had on my hands to help people, maybe ever. We're not that busy. So it's getting a lot busier. I'll tell you that. And remember what I said last week. Hey, this weekend is going to tell us a lot about this market, because typically Labor Day weekend is not a busy weekend for real estate. Typically it's very much a vacation weekend, and it was super hot. So we had the beach going on, and it was bonkers this weekend. I talked to all kinds of people this weekend. It's a 7-day-a-week business. My phone is always on. So I'm always, getting back to people in a reasonable amount of times. We went to the beach this weekend as well. It was awesome. But if you want to get a quote, if you want to see if I can help you out, call me, text me, email me. I'll hook you up. That's how we do it. Okay. So I want to make you aware of that program. Now let's take a look at these. Redfin data, September 1st. This is Thursday last week. The average home sold for less than its list price for the first time in over 17 months during a 4-week period ending in August. Okay. The housing market cool down continues. Notice that same line keeps getting used by the media. Every month since March 2021 has seen an average sale to list ratio over 100%. So let me just tell you, because people will try to throw this at me like, oh yeah, see, the decline is just beginning. Sale to list ratio was never over 100 forever. It's never been. It's only in the last couple of years where that was a thing. And I know because when we were shooting this listing, which was from like 2015 to 2018 or 19, we were shooting this listing, and I talked to tons of home sellers, tons of listing agents. And some of the best listing presentations that I saw were agents who were like, look, the average sale to list ratio is 96%. Ours is 100.5%. We are better. And I thought that was a great way to display that, we're beating the competition as far as the accuracy of where we're pricing our homes. A lot of people are telling you it's too high and then they sell it for less. We are telling you what it's going to sell for and we're selling it for that. I thought it was a great pitch. And, but it's never been over 100 on average. That's crazy. But we've had a crazy mark the last couple of years. So we've been above that. To just finally now be getting below that, guys, that still means that we're like on fire market compared to the rest of history minus the last 2 years. Literally. That's what that stat is telling you. I don't like using that stat personally because too much arbitrary information involved, but that's what it's telling us. Here's some of the leading indicators of home buying activity. And this is the part that you probably want to take a look at. There's also some key housing market takeaways for the metro areas. You're probably going to want to take a look at that as well. For the week ending December, mortgage rates rose. Tells you about that. Fewer people search for home for sales on Google. So down 26% from a year earlier. So they're looking at those things. Now, let me ask you this question. If the market is forming a bottom, and I'm going to attempt to illustrate this for you today. If the market is forming a bottom, meaning that we haven't bottomed necessarily yet, but we're in the process of forming a bottom, what does that look like? Is the bottom the point where people are searching the most for homes for sale on Google? Or is it at a point where people are not searching? That's the thing that you have to get yourself familiarized with, is what does that actually mean? So let me try to illustrate this. I'm going to do my best here. Oh, goodness. I'm working with 2 monitors here. So I'm going to try to illustrate 2 different things to you today regarding interest rates and home prices. All right. Good luck to us all. So when we talk about, bottoms in markets, let's say this is the short-term housing situation. We've gone up and now, we're kind of coming down like this. When we form a bottom, typically it looks like this. Bottoms tend to form sort of like a cooking pan, right? And while we're making this bottom, prices are kind of doing this, usually kind of like making teeth for like a mouth. This is baby shark do. I don't know what's going on here. That's what it kind of looks like. And usually like somewhere in the bottom, there's like a little moment where the market just really is done. And that's the capitulation. That's when it's over. But for the most part, it's just kind of doing this and then it starts to grind higher. And all of a sudden people are like, whoa, what's going on? Now, this whole time in this entire range here, however long this is, I think it's going to be 6 to 8 months for us in this case, this entire time here in the shark mouth, it feels the same. The market will feel the same. And you'll start to notice the change up here. Once we break out of it, you'll start to notice that because you'll see there'll be more activity and stuff will be selling over lists and there'll be all these different things happening. But during this whole period where we're doing the consolidation and we're making the mouth, we are finding the bottom. It's just kind of a little back and forth where one day it seems like a buyer's market, the next day it seems like a seller's market, but we're really just truly consolidating. And then we start to grind higher. No one will really know when this bottom moment takes place. No one will really know when that is. We won't know until later, but you'll just see it sort of grinding sideways. And that's kind of how it works. Okay. That's one illustration. Here's the second one. A lot of people, so here's real estate prices. We'll do a little bit longer version. Okay. This is kind of the movement. This is normal market movement, right? If you've ever studied markets, they move kind of like this, right? This is how markets move. This is exactly what you see on the real estate chart. If you go back as far as you want in history, but a lot of people will make a couple assumptions that are wrong about the correlation. So let's say down here, and I'm just going to say for VA and FHA, right? Let's say down here at this point, rates were at 5%. Okay. But then up here, when we made our peak, rates were at 2.5%. So a lot of people will say, well, if rates go back to 5%, then we should get a full retrace, right? Like prices should come all the way back down to here if rates go up to 5%. But that is not how it works. Now, there is a correlation between interest rates and home values, but not a direct correlation. So what that means is when rates go up, prices will come down. Let me use a different marker. Rates go up, prices will come down a little bit as a result, but it doesn't mean that you're going to get a full retracement. Okay. And this is just an illustration. This is not exact, but I just want to try to explain this concept. This pullback that you get right here because of rates going up, that's your buy zone on the traditional market movement, which is up, come back, breather, boom, continue marching in the same direction. This is basically what real estate has done since the beginning of time. So we can use this to know, now this may not be exact, right? It could be down here. We don't know exactly where that is. It's just for illustrative purposes. But my point is that you don't necessarily come all the way back to when rates were at 5%. The market is not one for oneing the interest rate with housing prices. It does cause prices to come down when rates go up like that, but it does not cause a full retrace. It just causes a breather. This is what we call the opportunity zone. This is where we are right now. Right now. This is where we are. And so if people think there's still some crash coming, some sort of full, retest coming back down to prior price levels at this rate, it's very, very, very unlikely. I'm not going to say impossible. It's not impossible, but it's very, very unlikely right now. Hopefully I did an okay job. I'm not very good at drawing, so I do my best. Seasonally adjusted Redfin home buyer demand index. Oh, I love stuff like this. So Redfin gives us so much juicy data because they have so much proprietary data. A measure of requests for home tours and other home buying services from Redfin agents was up 15%. Okay. So that's week ending September 1st, right? It's up 15% from the low in June. Interesting. In June, we had a low, according to the Redfin home buyer and demand index. That's where the low hit, was June. That's based on home buyers asking Redfin agents for home buyer services. Can I tour this property? Does this one have a third closet? Whatever. That's what happened. But was still down 16% year over year. So it's up from the bottom, but not where we were a year ago. Year over year stuff right now, not that it's useless, but it's not as helpful as it may sound. However, if you're going to say where is the bottom, we're up nicely from the bottom on that index, which is very, very interesting. Let's see here. Was I saying something about that? What's up, C Green? How you doing? Diamond Hands is here. Finally caught the stream. I got you. No, I got you. Glad you could. Touring activity as of August 28, down 9% from the start of the year, compared to 11% increase at the same time last year. So there's things that are happening here. Mortgage purchase applications down, especially year over year. Some key housing takeaways too. I won't go through all this stuff, but because some of the stuff isn't San Diego oriented, but this is a really, really good place to go to get information. I'm telling you, Redfin is, and really could be, just the real estate news source of all time because of the fact they're so plugged in. They have their own brokerage, they have their own data, they have their own estimate tools, they have their own valuation tools, they have their own, what do they call it? Index, home buyer demand index. What a useful piece of information from a nationwide, enormous brokerage who has their own website and has all this data. So helpful. And they, according to that index, the bottom was in June, guys. That doesn't mean that the levels can't go lower. It just means that it looks a lot better than you might think. And even with rates going up, which is not what we needed right now, I think if rates had gone down, as I was hoping and predicted that they would, then we would already be starting to see a frenzy. Already. That's how we're so much closer to being in another crazy mania frenzy market. We're much closer to that than we are to crashing still. That is just away. Just a Fed saying the right thing, a program to buy mortgage bonds, anything on that front. And we are right back into craziness again. Telling you, the opportunity zone is where we are right now. It's the place where you want to be. It's the place where you hope to be if you're a buyer. Let's check the S&P on this. So I did want to double check this. Thank you for bringing that up. So the S&P did hold today on the golden pocket. So it's not over just yet. The Dow is very overextended though, and if the Dow is the dog and the S&P is the tail, then we're headed for trouble. But if the S&P is the dog and the Dow is the tail, then there may be some chances still here for support. But I got to tell you, that looks bad. Wouldn't want to short into the support, but it seems like the market will go lower. It looks like it wants to go lower. Definitely doesn't look like it wants to go higher. That's for sure. All right, cool. I got to make calls. I'll put this up here real quick. If you guys need me, you know where to find me. Always here to give quotes. You know, those free, simple, easy, no lender fees, no BS, low mortgage rates. You know how to find me. And always here to answer your questions. You can email me, call me, text me. You can shoot me a message on LinkedIn. I probably won't see it. You can comment on YouTube, Twitter, and on the Book of Faces. I'll be there. You guys have a great night. I'll see you soon.